Thanks for tuning into Talking Point Unfiltered, wherein we like to have long, slow conversations about maybe boring topics, but actually very interesting topics, because the world is anything but boring right now. And if you're in the investing business, well, it's actually the stress levels and the excitement levels are right off the charts. So to talk about all of this and more, Nilesh Shah of Envision Capital, our guest today. Nilesh, so good having you. Thanks for joining in.
Thank you, Niraj. Thank you for having me on this show.
The pleasure is ours. And yeah, maybe I shouldn't have said, because it is anything but boring right now. Almost every single day is bringing out a new thing.
Yes and no, because every day something or the other is coming up. And what you thought was like final yesterday suddenly kind of changes today, and you really don't know what's going to happen tomorrow.
Exactly.
In terms of the specific things going around us. So I wouldn't say, I think the world can never be boring in the sense that everything, every day, and it's a dynamic world. I remember there was a coin which was also, there was something which was coined many years ago. I think if I'm not mistaken, it was the US Army which said it's a VUCA world, volatile, uncertain, complex, ambiguous world. And so when you have the world which is probably like that now, it surely is a lot more interesting.
Most certainly. Okay, let me try and dwell. What we'll do is, Nilesh, for the duration of this conversation, try and focus a bit on the world matters. Try and focus a bit on India's role within that world. Is that role changing? And is there a new world order for select pockets? I remember one of the leaves that I'll draw will be from our earlier conversation, where I had promised the viewers that we'll talk about manufacturing in India. So we'll try and talk about that as well. But first, the world. And it seems interesting, Nilesh, that let's say two powerhouses which are kind of battling each other out. One was the manufacturer for the world, the other was the consumer of the world. And both of them want to do the opposite now. China wants to actually stoke domestic consumption. And here we have US who's saying, okay, make in America, and I want to become the manufacturer all over again. It's almost, I wouldn't call it dystopian, but it almost seems unreal, so to say.
Yes, surely. And it was really hard to imagine that the two sides would want to do what they're trying to do today.
Exactly.
One always thought that the US always wanted to be more focused on technology or the intangibles, the softer world, the softer power. And America always wanted to be on the harder side, or the harder world, which is manufacture, metals, commodities, materials. And the two of them now going into opposite direction of where they were, or probably now trying to kind of head into the same direction, or going and therefore trying to kind of clash in between. So there is clearly a conflict right now. And this is going to have far lasting implications. I mean, the repercussions of this will be felt for many years and many decades possibly going forward. And it surely is going to basically change the order in terms of who's going to do what, and which surely will create a disorder. So yeah, let's see how these things unfold. But clearly, I think it's going to change a lot. This is not just about, it's not just about manufacturing and all of that. This is something much larger, and the repercussions of that will be felt in many areas around the world, or many spheres of the world. This impact will be seen.
If it is not as stark a risk, Nilesh, what happens to the investing world? And for example, other emerging markets, Europe, which is also waking up to some bit of realization that they need to manufacture, if nothing else than defense at least, but more. And then India's role within all of that, right? For a long time, we've been bystanders, waiting for things to come our way, not quite going out there and taking the opportunity by the scruff of the neck. Could this time be different?
It certainly seems to be very different. And let's look at the world. On one side was the United States, on the other side was China. And the two were essentially pretty much accounting for bulk of the global economic activity. The way I look at it, the part of the world which is going to benefit the most is essentially the part which is, I would call as basically the center of the world, which is what you earlier alluded to is essentially Europe waking up, and on the other hand, India. These two, essentially, I would use the word geographies, which will be the biggest beneficiary, because Europe has now no choice but to try and become truly self-reliant in terms of its manufacturing, defense, energy, and those kind of things. From an India standpoint, I think the outlook couldn't be any better. And I'll tell you why. Because
Please.
so far, bulk of the capital has been by default moving to the United States, global capital. Once in a while, there have been markets like China, or maybe times like Japan or India, which receive some bit of that money, but that's like maybe low single-digit allocation. What's really, I think, one important fallout of all of this is the de-dollarization, which means a potential weakness in the dollar. That, I think, is going to be a huge tailwind for a market like India, where because of the weakness of the dollar, global capital looks out for essentially emerging markets, and within emerging markets, India now has a very, very high share of emerging markets, not in terms of allocations, but in terms of the weight. We now have a double-digit weight. It's probably in the high teens. I think at some point of time we'd exceeded China. We probably are still ahead of China, maybe just slightly below China, but we are in that ballpark range. But global investors are still significantly underweight India. So I actually believe that purely from a liquidity standpoint, India is in a sweet spot. So my broader hypothesis, or the view that is emerging, is that both the far left and the far right, which is the United States and China, probably both will actually lose from all of this. And it's actually going to be maybe a very large part of Asia, ex-China, which could be a beneficiary. And within that, India, according to me, will be a disproportionate beneficiary. And then again, Europe, because combined Europe is relatively big on a combined basis. They surely have engineering capabilities, they have technology capabilities, so their ability to essentially bounce back should not be doubted. So I clearly believe that it's essentially this whole center part of the world, which actually might be a huge beneficiary of what's really going on.
And Indian policies, you believe, are firmly attuned to taking advantage of this opportunity?
Well, we definitely have had some policy responses. And I wouldn't say just the last 2 or 3 years, but if I were to say the last decade, there have been many things which have happened. And obviously, right from starting from GST to the bankruptcy code and to some of the labor reforms, and most importantly, PLI, sector-wise PLI, or reduction of the income tax rates for the corporate world, especially for manufacturing companies. These have been some of the big policy initiatives. But I still think we have a long way to go. We would by default gain quite a bit. I mean, obviously post-COVID, we saw the world saying China plus strategy, and India did benefit from that as well. And we've seen that happen in electronics, and we've clearly seen that India now exports iPhones worth more than $20 billion, which is quite significant. It's actually already 10% of our overall IT services export. So we export about $200 billion of services, versus that iPhone already in just 2 or 3 years is already at $20 billion, or maybe just around there. And that's the power, that one single product itself can be $20 billion, that probably become $40-50 billion. And just imagine, Niraj, if you have 10 such products like this, $400-500 billion on top of the existing $400 billion, we could, $1 trillion of exports is inside. But I think we've got a lot more to do. And I clearly believe that in each one of these areas, and to kind of promote manufacturing and to make India's manufacturing ecosystem a lot more competitive, I think a lot more needs to be done.
Okay.
And rather than just having, the opportunity fall in our lap, which obviously it is, but how do we kind of get a larger share of that? I think is something what we have to basically be, we have to try for, and we have to aspire for. And that to me is both our challenge, and it's our opportunity. And that, to me, the next probably few months, few quarters, or the next maybe a year or two, can truly be very, very defining. So if you were to kind of, you asked about the next 5 or 10 years, and I said the rest of this decade. So I think the rest of the decade, we would be there. I don't see a risk in terms of being able to grow at that 6-7%. But if we truly have to lay the foundation for 8 to 10% growth,
You think that's possible?
it surely is possible. I mean, we've done it, okay? So just look at the post-COVID period. I mean, though, of course, we had essentially, there was some bit of a reset, but we did grow at about 8% for about 2 years. We did that, right? What was the very big contributor to that? The biggest contributor to that was the government spending on infrastructure. The spending on infrastructure used to be 1% many years ago. That's climbed up to 3%. So I think that 6% growth is basically our, the normal growth
Default,
rate, right? Because of our population size, and we keep growing at that pace. But when we saw the government significantly up the spend on infrastructure, our growth rate climbed from, that 6% to 8%. So if that government spending on infrastructure goes from, say, 3% to 4% or 5%, the multiplier effect on that on the economy can be quite meaningful.
Okay.
And then, Niraj, on top of that, if you add, basically, so far we have also to deal with a depreciating currency. But what if we actually have an appreciating currency? So China went into a period of, like, say, something like 8 or 10% growth for like 20, 25 years. And in that period, actually, their currency gained strength. So imagine that India can be in a similar spot, similar situation.
Interesting. Okay.
So I don't think an 8% can be ruled out. 8% is something which we have achieved. We've achieved for a few quarters. It's now time to achieve that for a few years. And that 8 to 10 can also be possible with the help of the wave of de-dollarization, and obviously the private sector also chipping in. All of that can take us in that band of 8 to 10%. So 6 to 8% I think is quite possible. 8 to 10% difficult, but surely not impossible. I would actually say very much possible.
Okay, cross fingers for that. So let's try and probe into the last answer that you gave with two things, and I'm borrowing both things from the past conversations that we've had. Firstly, manufacturing. Now, in a conversation that we did maybe 4 or 5 months ago, you had mentioned about how, I mean, you were citing specific examples, but you had mentioned that, when I'd asked you about EMS, when you spoke about manufacturing, you said, okay, remove the E from the EMS, and manufacturing services, be it defense, be it infrastructure, etc., all seem poised for a multi-year run, and you would look at those spaces very, very closely. Now, could you elaborate a bit on that?
So, Niraj, on that EMS, and I would probably say that it stands for Electronics Manufacturing Services. I would probably say keep the E, but make it now export-led manufacturing services.
Okay.
So keep the E, but change the orientation, change the outlook. Okay, because obviously the first wave of manufacturing is all about indigenization. But clearly, when you're talking about indigenization, you're really referring to a market which is of 1.4 billion people. When you say, I want to kind of now be export-led manufacturing services, you're talking of a market which is 8 billion people. The market size of the TAM, to borrow a word from the new age world, the TAM itself goes up 5x. Okay, and there are 3 very big pockets in terms of manufacturing and even exports of manufactured products. One is all the conventional stuff, which is textiles, refined petroleum products, chemicals, pharmaceuticals, jewelry, apparel, all of that. That itself is there. And obviously there we compete with many, many players, okay, right from China up to Bangladesh, Vietnam, all of them. Okay. The second in between is electronics, which has started to take off, and where we have now become a net exporter from being a net importer. And we have clearly seen the magic of iPhone, and that magic was clearly driven by PLI. But then there's the third big area, which is to do with defense, aerospace, space, satellites, all of that, where that market is probably like kind of a multi-billion-dollar, maybe a few trillion dollars of an opportunity, and where India can showcase its manufacturing prowess in making lots of components, lots of subsystems, and a lot of systems, which eventually go into the making of defense equipment or aerospace equipment or many of these other areas. And that is a humongous opportunity. And it's something which honestly can create wonders for not just the manufacturing ecosystem, but for our economy. And I think that potential is huge. And I think while demographic dividend is looked upon as an opportunity, but we also keep talking about the demographic disaster. That what, that can these demographics at some point of time, 10, 20 years later, actually, be a disaster.
Yes.
Okay. And the only way to kind of deal with that is to basically facilitate this shift from farms to factories. Because you still have roughly, say, 60 to 65% of the population, which is still dependent on farms. It's an area which is grown in very low single digits. Its share in the GDP is very small. And that actually is pulling down our per capita. Or it's not helping our per capita grow the way it should. And so that phenomena of farms to factories, the big silver bullet for that is manufacturing. So if we want to essentially be able to deal with a national problem and give it a national priority, it is basically manufacturing. Yes, we are largely a services-led economy. That's true. But that's white-collar stuff.
Yeah.
And before we essentially see the advent of automation and robotics in a very, very big way, and that to universalize that and see that playing out in a ubiquitous way, before that happens, we need to ensure that we need to create massive competence on the side of manufacturing. And a lot of it essentially is going to be policy driven.
Okay.
And we have to ensure that how do we make our manufacturing more competitive. Lots of areas have been worked upon, maybe in terms of availability of power, availability of energy, interest rates coming down, the GST, and all of those things have been hugely beneficial. But I still think we have to become competitive there in a significant way.
Okay.
And to me, that clearly is both the challenge, but also essentially an opportunity for India for not just this decade, but maybe for the decades to come.
So what does the investor Nilesh Shah bet on when the investor Nilesh Shah thinks of betting on manufacturing? You mentioned even in the past conversation, right? Things like defense, space, etc. What is it? Do you bet on these pockets? Because they're not very large pockets available, right? So a retail investor buying 100 odd shares is fine. How does an institutional investor like you depend on betting on this?
So as an investor, when you take a portfolio approach, you bet on multiple opportunities. It's just that while we think about businesses with long runway of growth, you normally think about consumer-led businesses, powered by urbanization. We think about businesses which are creating digital technology platforms.
Right.
So you think about digitization as well. One also thinks about opportunities around financialization. So there are obviously multiple such themes and multiple such opportunities. I think when we think about manufacturing, we normally tend to think about the next 1 year, 2 years. We're all conditioned to think in terms of what's the order book, and those kind of variables. But I probably think that if over the next, in the short to medium term, if we have even more policy initiatives targeted towards making our manufacturing more competitive, then I think that manufacturing in areas like defense, like aerospace, or even around manufacturing of batteries which go into electric vehicles, some of these areas, I mean, when we talk about energy, we normally think about energy producers, but we never think too much about the guys who actually contribute by making equipment for renewable energy,
Picks and
or
Charles.
or the components which go into the making of that equipment. You can actually have a very long runway of growth. You can have a runway of growth which is again for the next 5 or 10 years, maybe longer, where across multiple sectors you could actually have the manufacturing led opportunity.
Okay. And you believe all of these, energy transition as well, for example, in wind equipment manufacturers, there was a policy passed 2 days ago to make it completely indigenous, etc. So these pick and shovel companies, you believe, will do well?
Absolutely. Absolutely. These are the kind of companies which, again, have a huge growth opportunity. And just look at it. We have an aspiration that by 2030, we have to have about 500, the target is to have 500 gigawatts of renewable energy capacity. We are only at about 200 gigawatts. That journey from 200 gigawatts to 500 gigawatts is a massive opportunity. And that's only now. That's keeping in mind the requirements till 2030. But as you kind of get closer to 2030, I'm sure we're going to figure out our requirements for 2035 and 2040. And those requirements are going to be huge because we are basically a growing country.
Yeah.
And a country which is growing not just at 6%, but if we start to grow at 7%, 8%, 9%, 10%, just imagine the kind of requirements that we will have for energy. And therefore, what's the kind of capacity that we will need? And therefore, for that capacity, what's the kind of equipment that we need to manufacture? And the kind of the size and the value of components and subsystems which will go into all of this. It's quite huge.
Interesting.
Just look at even defense. I think we probably we spend a few percentage points of our GDP every year on defense equipment. A lot of it, of course, is on the expenditure side or the expenses side, but then there's a fair bit which happens on the capex side of defense. That's just imagine that 2, 3, 4% of the GDP. Those numbers can be mind-boggling.
Yeah.
When you become actually a $10 trillion economy, and just 2% of that itself is like an annual $200 billion opportunity.
Got it.
And within that, if you just look at the components opportunity, 10% of that itself can be a $20 billion opportunity.
Yeah. And this is only domestic.
The
size enables companies to go export as well.
Yes.
Got it. Okay. You're constructive defense, that means.
Yeah,
Select defense.
I think it's all about manufacturing. Now, whether as a manufacturer, I can manufacture for defense, I can manufacture for aerospace, I can manufacture for electric vehicles, if I can manufacture for energy equipment. It's all about just dealing with ability to manufacture precision turn components.
And there are companies in India listed space who are doing a combination of these things easily.
Yeah, absolutely. There are several companies which are doing, and there are 2 or 3 very established groups who are trying to kind of do this. But the idea is to not just have 2 or 3, but the idea is to have 20, 30, 40 such opportunities.
Yeah. Okay. Nilesh, as we wind up, my final question, what would be the risks to the India story? Would it be global in nature, or could it be local policy led?
I would still think it would be global in nature.
Okay. The markets, we mean.
Yeah. I believe, I would still kind of pretty much have confidence in our policymakers that whenever faced with a situation, they have been able to rise to the challenge and have tried to kind of convert an adversity into an opportunity. And I think, I think our policymakers will basically continue to rise to the occasion. In addition to that, obviously, our demographics and the wave of urbanization and digitization would ensure that we keep growing at around a rate of 6%, 50 basis points plus minus, which I still think is going to be fantastic in a world which is going to be starved of growth. So clearly it's going to be global growth, which is going to be a challenge. And I think if all of this leads to a global recession or a recession in the world's largest economy, which is the United States, it will create its own set of tailwinds for our economy for the short to medium term. So I clearly believe that that's kind of risk number one. The second big risk is, at least, I mean, a lot of people keep citing about that, look, when the tariff world changed 100 years ago or 80 years ago, it did lead to geopolitical conflicts. And geopolitical conflicts which pretty much were very, very kind of significant. They were not kind of local geopolitical conflicts which we have seen over the last 3-4 years. That to me would basically be the black swan event. And I don't think we will get there. But, I mean, when we're talking about risks, they may sound very theoretical, but can't rule out those kind of situations as well. So I would think purely from an India standpoint, I think we seem to be on a strong wicket. We also seem to be on a safe wicket, So we seem to be on a safe wicket, on a strong wicket. But surely, and that's largely driven by our local tailwinds. But at the same time, we surely will have to deal with global headwinds.
Let's see how well we do. But Nilesh Shah, such a pleasure talking to you. Thanks for taking the time out and being with us today.
Thank you so much, Niraj. Thank you so much.
And viewers, thanks for tuning in to yet another episode of Talking Point Unfiltered.